So there are several factors driving growth for BHG Retail REIT. One of the key things I would say, which we cannot ignore, is the macroeconomy, the macro environment. I think as with all things, if the macro environment is behind you, that's a big help. So for example, if you look at the GDP growth of China, it has grown more than 6% year on year. Sales, total sales in China has also gone up about 10%. Urban per capita disposable income has also been up. Likewise, you have the two-child policy that kicked in as well. So all these have actually led to more domestic consumption. It has led to the middle income growing tremendously. So that is where we feel that if we run a community mall such as ours, we stand in very good stead. Secondly, will be proactive asset management and enhancement. So in terms of proactive asset management, I think most importantly, we stay true to our positioning of being a suburban mall or community mall that actually serve the residents that live around the area. So that's one key thing. I think with that, the business will come. I mean, the business will come, of course, the money comes in. At the same time, our leases are also structured in a way that gives us room to grow. One example will be the relatively shorter leases ranging between 1 to 3 years that will give us a chance for rental reversion upon expiry. And it also gives us a chance to rejuvenate our tenant mix if there's a need to do that. Then the other two things will be our inbuilt escalation on a yearly basis in most of our leases. So that's good. So for existing leases, it grows. And last but not least, most of our leases also have a gross turnover component as well. So the better the tenants do, the better we do. And we also make sure that when we carry out various events in the mall, be it what you call a PR event, which is activities or promotion kind of events, these are completely relevant and actually lead to bigger sales as well. So that's what we do. At the same time, we have also been doing asset enhancements. So we have done that in our Beijing Wanliu Mall. So prior to IPO, a department store exited, and they gave us a chance to bring in 25 new brands in. And the brands that came in will be your Muji, your Chow Tai Fook, jewelers, and your Korean cosmetics and all that. And in fact, these are the very brands that the residents and the shoppers around wanted to have. So that was a good thing. And right now, as we speak, our Chengdu Konggang Mall is going through an AEI as well. What we've done is that in basement one section of basement one, we have actually converted that into an active lifestyle kind of space. So in China right now, there's a very strong drive towards active lifestyle, towards fitness and activities. And so that resonates very well, particularly amongst the younger people that live around the mall. So that's what we have done. We've carved up that space. So now we have brands like your Nike, your Adidas, your New Balance, Li-Ning, all in one section. And we've also themed the whole common area, including the walls and the flooring, to be that of a sports section as well. So this is something that we will continue to do along the way. As we see more opportunities for AEI, we will continue to do that as well. And of course, thirdly, will be through acquisition. Everyone's always asking, when are you going to acquire the next property? So acquisition is a very key thing to our growth. There are two channels that we're looking at. The first one is the right of first refusal pipeline by the sponsor group. There are 14 properties over there right now. So we're monitoring this list very closely. The first batch of properties will be deemed ready for consideration sometime in 2018. So now we're already halfway through 2017. We're already looking through the whole list right now to see when they're ready. And the other channel and avenue would be third-party acquisition. So we are also looking at third-party properties and to see whether there are any yield accretive properties to bring in. But I think whether it's from the sponsor group or whether it's from a third party, the key thing that we are looking at really is yield accretion. So we have to acquire responsibly and obviously maximize the return to our unit holders. I think the last thing that will drive growth is how we embrace this whole omni-channel retailing that's happening, not just in China, honestly, but around the world right now. People are now buying things online and offline concurrently, right? So there's no fighting e-commerce, so to speak. If there's something they're going to buy online, they will continue to do that. But how do we then, as a physical mall, continue to stay relevant to our customers? That's the key thing. So I think when we get that mix right, and we have the right tenant mix that will draw people to physically come to our malls to spend their time, we have the right activities, that will set us for very good growth.